The TTF and NBP front month and front season products are caught within clearly defined sideways ranges, and we ended last week in the middle of those sideways ranges. Hi, my name is Marcello Kolax. I'm the managing director at Clever Markets, and today I'm walking you through the European energy charts. As always, nothing you see here actually constitutes trading advice. It is just my humble opinions and, of course, not an invitation to trading. So at the start of this week, we are confronted with this TTF sentiment poll, and we can see that the bulls and the bears are reasonably balanced. So we've got the bears at 37% and we've got the bulls at 40%. So this indecision or this even split is perfectly reflected us being in the middle of this sideways range with no strong preference. So right now, I personally don't have a strong preference which way the market could go. But yes, we do start the week with the bearish inclination. I'm not 100% convinced of that. Here we have a quick snapshot of the Clever Markets dashboard that our clients are getting this morning. And you could see that our bullish stance on the hourly charts has now reverted. Only the NBP front month is already bearish because we broke past an important support level. All the others, TTF front month, TTF front season, and NBP front season, they are neutral because right now there's no clear preference. Within the rectangle, we are neutral, of course. Don't be confused by the German power and EUA markets. Yes, we are still assessing them as being bullish in line with the Clever Markets methodology because these arrows here, they are not forecasts. They're simply telling us what the market is currently doing. And until we do get a clear break below these ranges, that we'll show you in a second, we remain bullish. So let's get started with the TTF front month daily chart. What we're seeing here, zooming out, is this sideways range between 31 and 33.44. And that has been in place since the 28th of August, and we have been swinging within that. And you can see within that range, that is the middle that I'm talking about right now. These three small-bodied candles are showing me that the bulls failed to push higher after this initial bounce that we saw with this piercing line candle pattern last week. So the bulls aren't fully convinced. They're not pushing through. Right now, I am indecisive and I don't have a preferred outlook. So for that, we are looking at the hourly chart. Just one more thing. As we are within these ranges and in the middle of these ranges, most tools stop working. So I don't want anyone to use the MACD right now. The moving averages are kind of useless, and even the usually reliable stochastic is not really helping us right now on the daily chart. So on the daily chart, honestly, we can only wait for a break past the range to get started with a bigger momentum trade. But within that range, there's not much to be had. So let's have a look at what happened here, right? So this here was the bounce of the support area, as you can see here, right? So this thing here is this down there. So after the bounce, we did get a smaller correction on the 17th of October, which was perfectly fine. So at this point in time, we are still thinking, hey, just a corrective move in an underlying uptrend. And that's exactly what happened. We did find support at the 61.8% fib retracement. And back then, we were still inclined for bullishness. Why was that? Because momentum tools and trend tools, the MACD and the moving averages, while we got this tiny bearish down leg, we are still just topping out. Yes, of course, we did get a stochastic signal that was bearish, and this combination, bullish trend and momentum tools coupled with the bearish stochastic, is giving us a signal for a smaller corrective move in an underlying uptrend. And that was exactly accordance to textbook, as we have written in the Clever Markets Technical Analysis playbook here. There you go. It is available for my clients. If you want a snippet of this, do get in touch. So on page 82, we are in the section differentiating between corrections and reversals with the help of indicators. And scenario 3 is describing exactly what we had, right? We had a downside correction in an underlying uptrend where trend and momentum tools were aligned with the preceding trend, but then they started to flatten out as we are correcting lower, but we are never ever getting a real bearish signal, right? And by the way, here's what we write. Considerations for physical traders and for speculative traders. That was exactly what's happening here, right? We did have an uptrend. Trend and momentum tools were pushing higher, and they were topping out a little bit as as the market started to move down. Nothing crazy here. We put in the Fibonacci retracement levels because we know that as long as we start finding support at the 61.8% Fib retracement, in our case 31.9, the market still has a chance at bouncing and simply continuing higher. And here's the problem. We did bounce, but the bulls didn't push through. So this completely changed our outlook because we are now making lower peaks and we declined back to the support level. So now we are looking at the trend and momentum tools and we saw, bearish crossover on the MACD. Bearish crossover on the moving averages. We start seeing higher volume on the down leg. So all these things make it more likely that the market could decline from here. And can you see that's the beauty of TA? We are not married to our ideas and we are perfectly happy to adjust our opinions. And that's exactly what smart people do, right? When we are faced with new evidence that contradicts the previous assessment, and we simply adjust our view of the market. And that's what's happening right now. So why am I still split? Well, I'm still not bearish because we're still not making lower lows and lower highs. What I want to see is a clearer break below the 61.8% Fib retracement at 31.9, and then I would be rather bearish. 31.39 would be the immediate target. Below that, 31.11. But can you see from the daily chart, we see that we don't have much room to go either way because we have the support here and the resistance there. So this here might be a very, very short-term play for some intraday traders this morning. But please don't get rattled by any sort of higher volatility this morning between 31.9 and 32.37. At the start of this week, it looks to me like the markets could move lower a little bit more. And once we arrived at those support areas, it's really important to keep an eye on the lower level charts, like the hourly and the 15-minute chart, to see if we are going to break down or if we are just going to bounce. For speculative traders, if we are bouncing, this might be a very interesting entry opportunity. If we break lower, however, momentum traders might enter the market. For any physical traders out there, the support area might be some opportunity to buy on the cheap, but of course, it is not recommended to lock in all the volume in case we do break lower. German power and EUAs don't look like they could go much, much higher as of right now. I also want to quickly show you what the TTF front season is doing. And here, by the way, the NBP is very much aligned. So the movements are nearly one-to-one. So what you can see here, we did have this big gap, which was probably mostly likely related to the seasonal rollover. But overall, we are still within this descending channel, but we haven't made much progress since into either direction. So here I am neutral within 29.93 and 31.73, this trough and this peak. And you can see at the start of this week, I am still rather neutral inclined that we will continue within this range. I am not strongly bearish inclined, but if we push lower, there isn't really anything to look at. There's nothing to aim for other than this descending channel itself. So within this range, we can see that trend and momentum tools have flatlined, so we can't really use them. And even the stochastic that I usually tend to use isn't really doing much at all. So here, be careful, okay? So on the hourly chart, we are working with this. Once again, this is the peak and this is the trough, and within that range, nothing is happening. Yeah, we are making a lower peak and we are working with Fibonacci extensions right now. So I'm thinking that this down leg after the correction can be replicated here. So we are getting a few targets. One is at the 61.8% Fib extension near 30, and the 100% extension is at 29.5. So 100% extension simply means that this length here is replicated after the correction here, right? So this is the only thing that it means. So let's have a look at the trend and momentum tools. They are pointing lower. We've got the MACD pushing lower. We got a bearish crossover on the EMAs. So overall, there is a chance for us to push lower, but it's not quite reflected yet on the daily chart. So if we really move, then the scenario on the alternative scenario on the daily chart is more likely to play out. Now let's have a look at the German power front year. We are working with this rising channel on the daily chart that seems to be fairly stable since mid-August. We got the peaks and the troughs reasonably clearly hit, and I really like that. So in the last trough here, we didn't really hit this rising channel support anymore, which usually is a sign of the market breaking the other way. So we would now expect the market to push higher. But it is already an uptrend, and I don't believe that uptrend acceleration past the already ascending channel is very likely. So let's have a look. At the start of this week, it could look like we are getting another strong push higher, maybe towards the 89, before we start looking for bearish reversal opportunities again. And of course, these bearish reversal opportunities would come in the form of bearish reversal candles. So you are encouraged to learn your candle patterns. But the even better signals we are getting on the lower level charts. So here the hourly. So can you see we did have this really good peak and trough, the flow of higher highs and higher lows. But you can see how this up leg here is much shorter than this up leg, right? So that is showing me that the bears are slowly running out of steam. And you can, sorry, the bulls are slowly running out of steam. And you can see how this is also super different to the TTF, right? We can draw it here, you can draw it here, doesn't really matter. But you can see we found support at a 38.2% Fib retracement after this down leg here, and then we pushed above this peak, making a higher peak. Even if it's just a tiny bit higher, the uptrend for now remains in place, right? On the TTF in comparison, we did see that, oh, we are already making a flow of lower lows and lower highs, and the market is pushing towards the 61.8% Fib retracement for a second time. So that's the difference. That's why German power is still bullish. But overall, you can see I am already bearish inclined. We see that the MACD formed a peak that was on the previous peak's high, while the price is still moving marginally higher. So this is called bearish divergence, and it's showing me price still moving up, momentum is already moving down. Then we start looking at the stochastic, which is also, I mean, it gave us two bearish signals here and there, but overall we are also making lower peaks and lower troughs here. So that's showing me that the market is inclined to move lower, and overall a move below 87.11 would turn the intraday market bearish. So let's have a look at the textbook. So we are in an uptrend, and now it's looking like we are reversing lower. So we are in an uptrend, and now it looks like we are reversing lower. Scenario 4, bearish reversal at the end of an uptrend, right? And it kind of makes sense. We see that trend and momentum tools have been flattening out or diverging, like while the price is still pushing higher. So the one bearish oscillator signal that we are getting here potentially is not the start of a correction, it is the start of a downside reversal. Now, what would this mean for the daily chart? Well, if we actually start to push lower, that means that we actually have hit the peak on the daily charts rising channel as well. And then, of course, we could decline. Now, if the alternative case plays out on the German power markets, maybe we bounce off here, then maybe we start moving in a sideways range a little bit longer. That would simply mean that we might get an exchange of red and green candles on the daily chart. So this is possible, and trading here becomes super tricky, and I wouldn't really have a strong preference until we actually start making lower lows for the bear case or higher highs for the bull case. Okay, the last market we are going to look at today is the EUAs. And zooming out on the daily chart, we have been working with this rising wedge. And I kind of like this. We have 1, 2, 3, 4, 5, 6 hits now. And the support got hit once, twice, this whole thing here 3 times, 4 times. So this is confirmed, and market obviously is looking at that as well. So rising wedges are usually showing us that the market is pushing higher. So this is not a bearish reversal signal as soon as we identify it somewhere like 1 or 2 months ago. No, it simply means that the uptrend that is currently active is about to run out. So we see that the upswings are getting shorter and shorter. So this means bullish exhaustion. Now we have moved so deep into the apex that neither the bulls nor the bears have much room to grow either side. So right now we are a little bit indecisive, and we are expecting the market to push sideways within 76.68 and 80.37, right? There's support and resistance levels. Ultimately, we still believe that the market is more likely to push down simply because that's what the chart pattern usually does. Also, you can see bearish divergence. The MACD is making lower peaks while the price is reasonably stable. So this is a sign of diverging. So the tool is diverging and the price is doing something else. The MACD, the stochastic isn't really telling us much. We are making a higher trough, but we are also making lower peaks, which simply is a symptom of the market moving sideways. So I wouldn't derive any big, strong signals from that. So let's have a look at the hourly chart. Here, the picture doesn't become much clearer, but you can see that the up leg here is much shorter than the preceding up leg. So once again, the bulls are running out of steam. We are now expecting the market to push lower simply because we did get a lower peak on the stochastic and we also got a bearish signal here. Now, the next question is this going to be a corrective move and we continue higher, or is this going to be a full-on trend reversal? Remember what we look at? We look at trend and momentum tools to establish that. So if we now see that the trend and momentum tools are, or at least the momentum tools are pointing lower or have been diverging from the bullish trend, then there's a greater chance on this whole thing reversing lower. We still see that the momentum is still bullish aligned. That's good. So what's the momentum doing? Oh, actually, the momentum still looks reasonably bullish to me. Nothing too crazy, but we did top out here, and I really want to be very careful with that. Also, you can see the momentum didn't rise much further past here, which is when the market was still moving a little bit higher. So overall, although we are still making higher peaks on the price, it's kind of looking to me like we are topping out. You can see this bit here, but there's no definitive bearish crossover on the MACD, so I'm not too confident in calling this a bearish divergence. However, all things considered, also considering that we are at this really strong resistance level, I still think that it's a little bit more likely for the market to push lower below the 78.12, the most recent trough. And if we are below there, then the bears would be in charge and would be gradually confirmed with every trough that is taken until on the daily chart we actually start breaking below the rising wedge and below the 76.68. So in summary, the TTF and the NBP products are starting a little bit indecisive this morning, but there is a good chance for us to break lower to test the support ranges. German power and EUAs look ready to push lower, but we don't have a confirmation yet. Everyone, stay safe out there in the market. See you around and bye bye.